They told you it was about politics. They told you it was about democracy. They told you it was about sanctions, speeches, and optics. That was the cover story. This is about oil. Not the headline version. The physical version. The kind that comes out of the ground thick, sour, heavy, and irreplaceable. The kind that refineries were engineered around decades ago and cannot simply swap out. The kind that powers fleets, freight, fertilizer, and food. And now it's under a national emergency declaration. Not because of Venezuela. Because of math. Because something in the global oil system has finally crossed a threshold it cannot reverse quietly. And the market has not priced it in. The mainstream narrative says supply is fine. Spare capacity exists. Inventories are manageable. That narrative collapses the moment you stop listening to analysts and start listening to chemistry. This isn't theory. This is published data. This is refinery configuration, sulfur tolerance, API gravity, and replacement timelines. You cannot cheat the periodic table. Venezuelan crude is not just oil. It is a specific molecule mix. High sulfur, high density, high energy content per barrel once processed correctly. For decades, the United States quietly built its refining backbone around exactly this profile. Not because Venezuela was friendly, because geology was. Heavy crude feeds cokers. Cokers turn residue into diesel, jet fuel, and petrochemical feedstock. Remove the feedstock, and the machine does not adapt. It starves, so refiners blended. They sourced heavy from Venezuela, Mexico, and Canada. They balanced it with light shale oil. They made the system work. Then sanctions hit. Then politics hardened. Then Venezuelan output collapsed. Not temporarily, but structurally. Fields flooded. Equipment cannibalized. Upgraders rusted. Skilled labor disappeared. This is not a switch you flip back on. But the charts kept trading as if it were, because paper barrels don't care about viscosity. Futures don't crack sulfur. Spreads don't feel corrosion. Physical systems do. For a while the gap was hidden. Canadian heavy filled some of it. Mexico declined quietly. Refiners stretched maintenance cycles. Inventories acted as shock absorbers. But shock absorbers compress. Then they bottom out. What changed is not a speech or a sanction. What changed is that the last buffer is gone. Strategic reserves are not a refinery feedstock solution. They are mostly light, sweet crude. Wrong molecule. Wrong problem. You can release barrels and still starve the machine. And now the emergency language appears. Not because policymakers suddenly care about Venezuela. Because they are staring at refinery utilization curves that no longer respond to price signals. Raising prices does not summon heavy crude from a collapsed basin. Price cannot resurrect corroded pipelines. Markets can incentivize drilling, but only where geology allows it. This is the math they refuse to run publicly. Global heavy crude supply is shrinking. Demand for middle distillates is not. Diesel runs the real economy. Not apps, not narratives. Trucks, ships, harvesters, generators. When heavy crude disappears, diesel margins explode first, then freight costs, then food. The early signal is not CPI. It's refinery crack spreads and sulfur premiums. Those are already moving. But the public is shown a different chart, a calm one, a reassuring one. This is how mispricing is manufactured. Paper markets trade abundance because abundance once existed. Physical markets are adjusting to absence. We've seen this movie before. The analysts were a decade late. The lab always leads the chart. The emergency framing is an admission without confession, a signal to insiders that contingency planning has moved from hypothetical to operational. Because once heavy crude falls below a certain threshold, substitution stops working. You cannot simply run more light oil. Refineries coke up, yields collapse. Maintenance intervals shorten, throughput drops. This is physics, not policy. And here's the part the market still isn't ready to face. Venezuela is not unique. It is the warning shot. Most remaining heavy oil provinces are politically constrained, environmentally restricted, or capital starved. Canada faces permitting and transport limits. Mexico's fields are aging faster than new ones come online. The Middle East prioritizes its own margins and alliances. There is no global surge waiting in the wings. Meanwhile, demand is not collapsing. It is changing shape. Electrification headlines distract from the reality that heavy industry still runs on molecules, not electrons mining. Construction, agriculture, defense, even the energy transition is diesel intensive. Wind turbines do not transport themselves. Solar farms are built with machines that burn fuel. Batteries are mined, crushed, refined, and shipped. This is why the emergency language matters. It tells you planners are no longer assuming smooth adjustment. They are preparing for friction. And friction in energy systems shows up as price spikes, shortages, and political theater. The public will be told it's temporary. They always are. Temporary lasted years last time. And the starting price then was far lower than today. This isn't about panic. It's about positioning, understanding that price is a lagging indicator when physical systems destabilize. When the market finally reacts, it does so violently. Not gradually. Not politely. Because inventory math is cruel. A few percent imbalance sustained over time empties buffers faster than intuition allows. And once buffers are gone, every disruption becomes systemic. A storm, a strike, a shipping delay. Each one cascades. This is why institutions are reactive. They respond to data that already reflects damage. You are not supposed to wait for confirmation. You are supposed to understand structure. Heavy crude scarcity is structural. Refinery dependence is structural. Replacement timelines are measured in decades, not quarters. This is why the noise feels disconnected. Why prices dip on headlines while fundamentals tighten underneath. Mispricing feels comfortable until it doesn't. The emergency declaration is not the event, it's the acknowledgement. A signal that the margin for error is gone. From here, outcomes narrow. Either demand is destroyed through recession and hardship, or prices rise until behavior changes. There is no third path that preserves comfort and abundance. This is not ideological. It is thermodynamic. Energy density governs civilization. And right now, the densest, most useful molecules are becoming harder to source, not easier. You don't need to trade this. You need to internalize it. Ignore the daily tape. Ignore the commentators. Watch the physical flows. Watch the refinery reports. Watch what governments do, not what they say. The system is already adjusting. Slowly at first, then all at once. Those who understand this early don't panic. They don't chase. They wait, because inevitability favors patience. And this is already in motion. They will try to manage this quietly. They always do. Small releases here. Temporary waivers there. A headline about cooperation. A photo op with flags. But none of that changes the molecule. Heavy crude does not respond to diplomacy on a quarterly cycle. Refineries do not re-engineer themselves because a press release asked nicely. And this is where the real tension begins. Because the institutions tasked with maintaining stability are structurally incapable of admitting instability. So instead of truth, you get noise. Instead of preparation, you get reassurance. Meanwhile, the physical system keeps tightening. Look beneath the surface and the signals are everywhere. Refineries are running harder, not because demand is booming, but because margins force them to. Deferred maintenance becomes normalized. Outages quietly last longer than scheduled. Unplanned downtime stops being rare. This is what stress looks like before it breaks. Shipping rates for certain crude grades start to behave erratically. Insurance premiums creep higher. Blending economics stop penciling out cleanly. None of this shows up in a clean narrative, because narratives prefer simplicity. Reality prefers constraints. The emergency framing exists because policymakers understand something most market participants don't. Energy systems are not linear. They absorb pressure until they don't. Then they snap, and when they snap, the response is not proportional. A small shortage does not cause a small price increase. It causes rationing behavior, hoarding, front-running, export controls disguised as temporary measures. We've seen this movie before. The charts looked calm right up until they weren't. Analysts debated decimals while the system crossed a physical boundary. This time, the boundary is heavy crude availability relative to refinery design. You cannot swap out the foundation of an industrial system without consequences. And here's the part that traps latecomers psychologically. When prices dip during early stages of constraint, it feels like validation of the wrong thesis. People confuse volatility with resolution. They assume the market has decided, but markets don't decide physics. They discover it, often violently. Price weakness in structurally constrained systems is not a signal of abundance. It's a signal of misunderstanding, because paper markets clear narratives faster than molecules can move. This is why institutions keep getting blindsided. They model flows as if supply were elastic. They assume capital can summon barrels on command, but capital cannot compress geological time. It cannot reverse reservoir damage. It cannot rebuild lost expertise overnight. This is the math they never put on television. Venezuelan heavy crude is not coming back at scale anytime soon. Not months, not years. Even optimistic scenarios stretch into the next decade. And by then, other sources decline further. This is not about one country. It's about a category of oil quietly vanishing. Heavy barrels were the backbone of the middle distillate world. And that backbone is thinning. The system can compensate temporarily. Crack spreads widen. Consumers pay more. Margins shuffle. But compensation is not replacement. At some point, throughput must fall. When throughput falls, everything downstream feels it. Logistics tighten. Construction slows. Food prices rise without obvious cause. The public is told it's inflation. As if that explains anything. Inflation is a symptom. Energy constraint is the disease. And now the psychological warfare begins. Because when authorities cannot fix supply, they manage perception. They emphasize demand destruction as virtue. They frame reduced consumption as progress. They redefine scarcity as sustainability. But reality doesn't care about rebranding. Trucks still need diesel. Farms still need fuel. Hospitals still need backup power. This is why the emergency language matters more than the specific measures. It tells you they are preparing for political fallout, not just economic adjustment. Because energy shortages destabilize narratives faster than anything else. They expose fragility, and fragility is contagious. This is where the audience listening now has an advantage. Not because you know a secret ticker. Not because you can time a spike. Because you understand structure. You understand that price is the last thing to move when physical systems shift. First comes denial, then intervention, then volatility, then repricing. We are still early in that sequence, which is why complacency feels widespread. People anchor to recent history. They assume mean reversion. They expect policy to smooth things over. Policy can redistribute pain. It cannot eliminate it, especially when the constraint is chemical. Sulfur content matters. Density matters. Refinery metallurgy matters. You cannot substitute a light molecule for a heavy one without loss. Loss of yield. Loss of efficiency. Loss of stability. Those losses accumulate. Quietly at first. Then suddenly everyone notices. This is when headlines flip from reassurance to shock. From markets are well supplied to unexpected disruptions. Nothing unexpected happened. The lab led the chart. It always does. This is why patience matters more than prediction. You don't need to know the day. You need to know the direction. And the direction is set by geology, infrastructure, and time. Time is the one variable institutions cannot accelerate. They can print money. They can pass laws. They can sanction and subsidize. They cannot compress decades of underinvestment and neglect into a smooth transition. So the system will lurch. And when it does, the people who treated dips as information rather than noise will be calm. Not euphoric, not frantic. Calm. Because inevitability is not exciting. It's clarifying. From here on, watch actions, not words. Watch which refineries quietly cut runs. Which exports get reviewed. Which strategic assets are suddenly deemed critical. These are not coincidences. They are the visible edge of a deeper adjustment already underway. And once you see it, you can't unsee it. The emergency is not coming. It's already here. It just hasn't finished expressing itself yet. The final mistake people make in moments like this is assuming awareness spreads evenly. It doesn't. Information moves in layers. First labs, then logistics, then balance sheets, only last headlines. By the time the public conversation turns serious, the physical system has already adapted in ways that cannot be reversed without pain. That adaptation is happening now. Refiners aren't waiting for permission. They're adjusting crude slates. They're prioritizing survivability over optimization. They're choosing reliability over headline margins. That means less efficiency, less output, more fragility. This is how constraints embed themselves quietly. And once embedded, they don't leave just because prices spike. This is where belief systems start to fail. People are trained to think price creates supply. That worked when resources were young and systems flexible. It does not work when decline meets complexity. Late-stage systems behave differently. They are sensitive. They are nonlinear. They punish small errors disproportionately. This is why volatility will feel irrational to those watching only charts. But nothing about what's coming is irrational. It's mechanical. When heavy crude supply shrinks, refiners bid harder for what remains. When they bid harder, geopolitical leverage shifts. When leverage shifts, alliances strain. Suddenly, trade routes that once felt stable become strategic choke points. Insurance markets react before commodity markets do. Shipping reacts before consumers do. Credit reacts before politicians do. By the time leaders speak in absolutes, the decision space has already narrowed. That's the pattern. And the pattern is repeating. You'll hear talk of temporary dislocations. You'll hear reassurances about diversification. You'll hear promises of innovation. Innovation cannot replace feedstock overnight. You cannot innovate your way around density, viscosity, and sulfur on a political timeline. Those are properties of matter, and matter is patient. This is why the most dangerous thing right now is false calm, because calm encourages inaction. Inaction preserves exposure. The risk is not that prices explode tomorrow. The risk is that people wait for certainty that can only appear after repricing has already occurred. Certainty is expensive. Early clarity is free. Understanding that the emergency framing is not about Venezuela, but about system brittleness, changes how you interpret everything that follows. Every diplomatic move, every inventory report, every refinery incident. They stop being isolated events. They become signals. Signals of a system operating closer to its limits than it publicly admits. From here, the noise will intensify. More conflicting data, more expert disagreement, more emotional headlines. That's not confusion. That's stress. Systems under stress generate noise. Strong systems absorb it. Weak systems amplify it. And this one is amplifying. You don't need to convince anyone. You don't need to argue. You just need to stay aligned with reality. Reality says heavy crude is scarce. Reality says replacement takes decades. Reality says demand destruction is the only fast adjustment mechanism left. Those are not opinions. They are constraints, and constraints always win. So when you hear relief in a price dip, recognize it for what it is. A momentary release of tension in a tightening system. A discount created by disbelief. Not a resolution. The people who endure these cycles best are not the most aggressive. They are the most patient. They understand that markets oscillate around reality, but reality never oscillates around markets. The emergency declaration didn't create this trajectory. It revealed it. And now that it's revealed, the path forward narrows with every passing month. No hype, no panic, just quiet alignment with inevitability. Because this isn't about predicting chaos. It's about recognizing that the system has already chosen its direction. And it's moving there whether anyone believes it or not.